Making money on the stock market during the pandemic. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. Still working through my morning stein, and I thought we'd have a look at this news.com article discussing the best and worst stocks on the Australian stock market and how to make money on the share market. I thought that's a good one that everyone would enjoy. And just remember, a few days ago, we were discussing, another article about just the warnings for retail investors, where people are just playing the market, trying to short and sell and invest and risk everything. And it's very volatile times at the moment. It certainly is. Let us know in the comments if you've been playing the market and doing well at it. Next round's on you, but we'll have to see. Let's have a look at these best and worst stocks on the market and see if it surprises us. The Australian share market is delicately poised, leaving some investment experts believing now is the time to buy up stocks and reap the benefits of a looming snapback in prices. Now here's the thing, if you think that the economy is going to have a V-shaped recovery, or if it's going to continue to get worse, and I'll just bring up trading economics, guys. We can have a look here at stocks. How is the ASX 200 looking at? If we jump to here, you can see, we're definitely well off the heights of 7,000. And the question is what we're seeing here at 5,500 roundabouts, is this going to shoot up? Or is it just a simple dead cat bounce that's going to continue down? Has the market priced in, have we hit bottom and is it going to go back up again? It's probably one for all the TA people out there, but let's have a look at what this article is telling us. The ASX 200 has had a remarkable few months as the pandemic ground the economy to a halt. It is in the rare position of being both a bear market, having plunged more than 20% from its all-time high in February 20, while at the same time classified as a bull market after rising more than 20% from its horrific depths of the 23rd of March. So where to from here? This just shows you the volatility that is in the market, guys. If you're brave enough to take that level of risk, and if you can afford it, more power to you. But what are you investing in? We'll see. Let us know in the comments what your favorite investments have been in recently in the market if you're playing in it, and we'll see if they're ones mentioned here. Bell Direct market analyst Jessica Amir has urged Aussies to jump in, saying a recovery is a matter of when, not if. Taking advantage of depressed prices can have a profound difference on your investment portfolio over the next 5 to 10 years, she told news.com.au. So don't procrastinate, start today. Well, I just remember looking at charts of the Great Depression and the great crash that they had in the stock market back then. It didn't happen in a month. It took a year round about. It went up and down, up and down. Earlier today, we were looking at an article just discussing AV Jennings, a home builder here, which has changed their forecast announcements and predicts that the real impact to the construction industry, the home industry, will be felt in 6 months' time. So is that going to go through the share market? What about all the shopping centres where the tenants are either at risk of leaving, or just not paying rent, or the big retailers that are shutting down and reducing foot traffic, or the change in consumer behaviour? Won't that all manifest in the market, or has it already? We'll have to see, guys. But the lay of the land is more nuanced than that, warns IG market analyst Carl Roeder, who said equities remain at risky levels given the uncertainty surrounding the reopening of international borders. He said investors should resist being seduced by companies inflicted with massive losses and are now tantalizingly cheap, such as tourism and travel stocks, Flight Centre and Webjet. Here's the thing, guys. It's all a matter of psychology. This level looks cheap because we had that. If we jump out to 25 years, it still doesn't look cheap back to 2000, does it? It's still double then. It's all to do with psychology. Remember, look at the GFC. We were at what? Did we reach 7,000? No, just under. Boom. 3,000. So we still got room to move if we're hitting that. And look at that. See that little jump there in the GFC? That looks kind of familiar, doesn't it? Would that be what's happening here? Could that be what's happening here? April, March, May. Yeah, maybe still a bit more room to move. That's what I'm talking about when I'm saying a dead cat bounce, guys. The cat's falling, hits the pavement, bounces up and goes back down, if you're not familiar with the term. Some people were asking in the comments. The next phase of the recovery will be the splashing of stimulus cash across the globe in an effort to kickstart economies, meaning export equities not restricted by border closures should experience a surge in business. While on the aggregate the market is overvalued, there are certain pockets where a suave investor can take advantage of the change in macroeconomic fundamentals and can still find value, he told news.com. And I think the story will be led in the future by the mining sensitive sectors of our economy first and foremost, but also some beaten up areas in the market that are still finding their feet in this recovery, which is the consumer discretionary space or real estate. It is time for nuanced and careful thinking rather than expecting the whole market to turn around. So he's saying maybe it's not the time of the ETF anymore. You actually have to put a bit of effort in. So how to invest in shares? Look for 3 things when considering investing in a company, Miss Amir said. Is it part of a strong and growing industry? Does it make money? And is its debt level low? Making money, that doesn't seem to be anything to do with all the unicorns. What about WeWork? It's never made money. What about Uber? It's never made money. Making money, wow, old school approach here. But most importantly, stick to what you know. Think about these companies that you interact with on a day-to-day basis that you might know and something about, she said. Pick about 5 companies and then go to a broker's site and have a look at their research on the stocks and ask yourself, are they in a growing industry? And are they likely to still be dominant in their field in 5 to 10 years? Even if it's a small amount, get started today and invest regularly into the market without trying to time it. Quality companies will always hold their value, unless we have a market correction. Here's the thing. Is the fall going to keep going? Is the impact to the economy going to be going to continue? We haven't even had a recession officially declared yet. But I mean, she makes a good point. If you dollar cost average it and just go in and not worry about it, So here we have best performing stocks from Feb to March. Minerals, evolution, mining. Yeah, so you can see here, Silver Lake Resources. Let us know in the comments if any of your favorites are there, particularly the gold and silver guys. And the worst performing stocks, Southern Cross, Webjet, 70% down, 70% down, 63% down, 59% down. Remember, if you take a 70% hit, you don't need to go up. You need to do better than 70% to get back up again, guys. It's a big mountain to climb to recover your losses. Just ask anyone in the crypto space who's holding a bag of sure thing crypto that's going to shoot back up with all those altcoins that have just crashed. But I'm sure there'd be some fundamental businesses that could be good buys. We'll have to see. So best stocks. Ms. Amir says a handy tool for novice investors plotting a path to riches through the share market is to take a look at the best and worst performing stocks. The pandemic has undermined the indices in the last few months and will likely be the major influencer for the foreseeable future. Since the ASX 200 reached its historic peak on February 20, the best performing stocks have been utilities, as the lockdown created a reliance on the internet, electricity and healthcare for obvious reasons, and consumer staples thanks in part to the infamous stockpiling of supermarket essentials. But gold miners have dominated as the price of the precious metal rose. 4 companies from this industry are in the best performing top 200 lists in the 3 months to May 21. Evolution, Silver Lake, and Saracen are all in the top 4, surging between 24.6% and 32.1% higher. Despite strong returns, Mr. Amir says value remains as the precious metals continues to rise. It may not be the same for the continue, but I definitely expect some gold players to be the top performers moving forward, she said. Well, why isn't she suggesting people also invest in some physical gold? Probably because it's very hard to get their hands on. I think this is a sign that more and more people are getting just worried. Because money printer go brewer, everyone. Money printer go brewer. Technology companies have also outperformed the struggling sector, with Appen, NextDC, and Technology One rising between 19.6 and 17.9%, while Afterpay hit an all-time high of its own this week. And the worst stock. Unsurprisingly, the falls in the market far exceed the gains. Radio specialist Southern Cross Media lost a whopping 82.6% to be worth just 15% on Thursday night as businesses cut back on advertising spend during the pandemic. Billboard supplier O Media suffered a similar fate, down 63.6%. Commercial property company Unibail Rodamco Westfield took a massive 63.2% as retailers were forced to close due to strict social distancing measures, while Webjet and Flight Centre plunged more than 70% as travel became forbidden. Among this sorry list of worst performers, Ms. Samir has singled out Southern Cross Media and Flight Centre as ones to watch, which were worth just 15 cents and $11.15 at the close of markets on Thursday. Flight Centre recently announced a huge restructure, and a big shift to the online world is going to save them significant amounts of cash. Well, yeah, they're shutting a whole lot of shops and putting a whole lot of people out of work. I'm surprised they've frankly had that larger retail presence. I can't remember the last time I've walked into a travel centre. That's something that's going to go really well for them. As they drop their costs and the economy recovers and travel returns, their earnings and revenue will rise. And for Southern Cross Media, radio and television demand is still there. It's just organizations haven't wanted to fork out to invest in ads. So future-proofing finances. Investing in shares is a luxury hundreds of thousands don't have after the lockdown caused massive job losses. And that's a good point. Not everyone is going to reap the benefit of the market directly. Nearly 20% of Australians were living week to week. Wow. 20%. Is that a sign of a thriving economy? I mean, in part, it could be just to a lack of financial education, which is pretty much non-existent, isn't it? The site's personal finance expert, Kate Brown, shared some tips for helping to manage and future-proof your finances during the government-imposed lockdown. So here we go. Let's compare these to what I've been hearing from Dave Ramsey on his radio show. Check your credit score. Maintaining a good credit score is wise during this time, on the chance you need to turn to financing options down the track. Wow, that is completely the opposite of what he's saying. His goal is to completely eliminate your credit score, not have any debt, have your own cash set aside, emergency fund. Well, okay, so I don't agree with that. Things that could impact your credit score negatively include missing repayments. So if you're in a tight financial position, seek help from your bank or financial institution. They may be able to give you some breathing room. Well, I'd say get out of debt any way you can. Do extra work. Sell trinkets. Collect scrap metal. Mow lawns. Do whatever you can. Try and work. Earn money. Guys, get out of debt. Consolidate. Smash your debt. You want to get your credit score. You want your credit score to disappear. Okay? Create a budget, particularly if your income has been impacted by the lockdown. It's a good way to take a look at your money. You're coming in from work, government payments and investments, so you know what you have to work with over the coming months. That's good advice, but I would also suggest that you track your spending. Like when we tightened our belt, Rachel was going to Aldi with Excel on a laptop to compare the costs of individual items, really down to weight. She got our food budget down really tight. I mean, we've completely stepped back from that now because that was a really unhealthy food budget, actually. The amount of carbs we had to eat, this is before we went down the whole carnivore and keto path, was just crazy. And this is why you get health issues with the lower income, because people are eating all this garbage, sugar-laden crap, and then it just compounds on itself, sadly. And you know why it's cheaper? Because it's shelf life. It can be stored on the shelf with full of, seed oils that keep it good. So, but yes, I'd look at the other one. Also reflect back on, make a budget and then check where the money's gone. Take a good look at outgoing bills. There's lots of potential savings to be made by reviewing regular costs such as your mortgage or insurance products. For example, if you're not sure if you can continue paying for health insurance, now could be a good time to review your cover and see if you can save money by downgrading your cover or switching to a new provider. Or, well, getting rid of it if you can. I mean, think about it, guys. Get rid of the Netflix. Get rid of this subscription, that subscription. That should be the goal, actually. Get rid of every single subscription. You don't need any of them. You know, save money. Ask for a discount, particularly during trying times. Providers and lenders are more likely to try to keep you as a customer, so don't be afraid to ask questions. That's the best advice here. Get on the phone and ask for discounts. So guys, here is some mainstream media tips on how to make money and get into investing. Felt like we were reading an advertisement for trading companies, guys. And I mean, it's interesting to see what parts of the sector have taken a hit. I don't think anyone watching here would be too surprised that gold companies have gone up. I know a lot of you are investing in them. One gentleman, his strategy was to look at what the ETFs invest in and just buy in those. As always, guys, do your own research. Don't depend on articles from newspaper or even any YouTubers as well. And be careful of people that front-run stocks as well, you know. They'll tell you, buy this one. There's a particularly crypto guy I follow, and it's interesting. He does this trick where he has this super stock that's going to, or super crypto that's going to make everyone a millionaire, and then he charges them a Udemy course to find out what the stock is. And you can see how many he sold of that Udemy course, you know, like 400 or 500. So he's making $6,000 just doing a little course to sell this stock. Quite impressive. And that, I mean, there you go. It's impressive how he's doing it. I wouldn't recommend it. I think it's a little disgusting. But the fact using Udemy to make educational material and creating a course that people can use, that's interesting. That's an opportunity there. We're thinking of looking at some maybe in the property sector or due diligence sector of how to get a project up and running. But that's for a later date. There's an opportunity there, guys. Anyway, thanks for watching. As always, please let me know your thoughts and opinions. What are your strategies for people to make money during the pandemic lockdown? As always, please like, share, and subscribe to the channel. If you're a fan and you want to support us, there are a few ways you can. You can join the channel on YouTube or Patreon. You can support us via our affiliate links at Amazon, eBay, Independent Reserve, or Kucoin. You can buy our merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, guys. I'll see you in the next video.